Anand receiving means Ram is paying, cash is going out. Paid carriage of goods sold to Tukaram on his account. Kodandaram is giving, so you need to credit the Kodandaram account, but you need to mention it is an advance of goods.
Hello everyone, I am Meghana from the Department of Commerce, lecturing in Vidhyaashram First Grade College, the Temple of Excellence. We are in the session 4 of Unit 2, subject Accountancy. In the last class, we have discussed about journal entries. In today's class, let us continue with the journal entries. So let us start with today's session. This is the problem what we have discussed in the last session. I explained all the entries and today I am going to give you the solution for this problem. First, Ram bought goods from Anand. Here, the person Ram, you are required to prepare a journal entries in the books of Ram. So, consider Ram bought goods from Anand means Ram is purchasing, it is a purchase for Ram on credit from Anand. So, the entry is purchase account debtor 1000 to Anand account. It is a credit purchase, so you need to credit Anand account. Next, Anand bought goods from Ram for cash. That means Ram is selling to Anand. So, Anand is purchasing. So, sales for Ram, this is a cash sale. So, cash account debtor to sales account. Here, when you made a sale, you will receive cash. Cash is coming in. So, you need to debit the cash 1500 to sales account. Next, Anand received cash from Ram 780 and allowed him a discount of rupees 20. That means Anand receiving means Ram is paying, cash is going out. So, cash is going out means you need to credit the cash and this is discount allowed from the Anand to Ram. That means Ram is receiving discount. So, Anand is the receiver, Anand account debtor to cash account. Cash is going out and he is receiving a discount. It is an income for the Ram. So, you need to credit 800. The total liability of Ram is 800, but he is paying cash of rupees 780 and he is allowing a discount of rupees 20. Ram made a cash sale for rupees 700. Ram is made a cash sales. It is sales for Ram. That means cash is coming in. Cash account debtor to sales account of rupees 700. Next, Anand supplied goods worth rupees 300 for Ram domestic use. You are preparing in the books of Ram. So, if the Ram is used any goods for his domestic purpose means it considered as drawing. So, drawings account debtor to Anand account. Here Anand is giving the goods. So, Anand account should be credited. Credit the giver. Next, Ram supplied to Anand machinery worth rupees 2000. That means Ram supplied machinery to Anand. In return, he received furniture, goods and cash. So, for Ram, machinery is going out and furniture, goods and cash is coming in. Debit what comes in, furniture, goods, that means a purchase, and cash what is coming in. This is furniture, purchase and cash is coming in and in return machinery is going out. So, you need to credit the machinery. Next, Anand charged Ram commission for rupees 50. That means Ram is paying commission of rupees 50. Commission paid is an expense. So, you need to debit the expenses. So, commission account debtor to Anand account. Anand is a receiver. Credit the receiver. Anand received a check of rupees 1000 from Ram in full settlement of 1050. That means Ram is paying a check to Anand of rupees 1000 instead of paying 1050. That means the remaining 50 is discount received. Discount received for the Ram. So,
Here Anand is totally liable to receive 1050. So you need to write 1050 and Ram paid a check of rupees 1000. So you need to credit 1000 and he received a discount of rupees 50. Discount received is an income. So you need to credit the income. So cash is going out. That means the check you are paying. So it is going out of cash. That means you need to credit the bank. Next, Ram check was paid into the banks. This transaction will not affect in the books of Ram. So you have already paid a check and entered in your books. So this transaction is related to bank and Anand. So it will not affect for the Ram's book. Next, Ram advanced a loan of rupees 2000 to Anand. That means Ram is paying cash to Anand as a loan. Anand is receiving a loan to 2000. So debit the receiver. Anand loans account debtor to here cash is going out from the business. So you need to credit the cash. Anand loan account debtor to cash account. Next, Ram received 500 from Anand for repairing the private car of Anand. So whether it may be a private car or it may be a business car, it will not affect in the books of Ram. So it considers as only the repairs. So he is receiving cash. Cash is coming in. Cash account should be debit and from repairs he is receiving the cash. So cash account debtor to repairs account. This is about yesterday's problem. This is the solution for yesterday's problem. Move on to the next problem. Journalize the following transaction in the books of Venkataram. You need to prepare the books of Venkataram. So, 2009 Jan 1st, Venkataram started business with the followings. First, cash in hand, cash at bank, goods in hand, furniture, building. All this is an asset. All this is an asset. Asset is coming in to the business. So, the entry for starting a business with the asset is asset account debtor to capital account. Because the asset is coming in for the business. So, you need to debit all the assets and credit the capital account. That is a representative personal account. Capital account represents the Venkataram's personal account. So, you need to credit the giver. That is the Venkataram. The entry will be Jan 1st, 2009. Jan 1st. Cash in hand. Cash account debtor and cash at bank, that is bank account debtor. Next, goods. Goods in hand means stock. Stock account debtor. Furniture account debtor and building account debtor. All the assets is coming into the business. So, you need to debit all the assets and credit to the capital or Venkataram capital account. This is a representative of personal account. So, what is the amount? Cash in hand 10,000, 20,000, 15,000, 5,000, 50,000. 20,000, 15,000, 5,000 and 50,000. Total is 1 lakh. We'll write narration as being business started with cash in hand, cash at bank, goods, furniture and building. Next, bought goods from Sri Ram. Bought goods from Sri Ram. Here, Venkataram is purchasing goods from Sri Ram. Here, they have not mentioned either for cash or credit, but they have given a person name. Means you considered it as a credit purchase. Purchase means it is an asset. Purchase is an asset. Debit what comes in, credit what goes out. Purchase means goods is coming in. So you need to debit the purchase and credit. Sriram is a person, comes under personal account. It says debit the receiver, credit the giver. Here Sriram is giving. So you need to credit the Sriram account. So purchase account data to Sriram account of rupees 2000. Purchase account data to purchase account data 2000 to Sriram account 2000. We'll write narration as being goods purchased from Sriram on credit. Next, on Jan 4th, sold goods to Sitaram for cash. Here, they have mentioned it is a cash sales. You are selling goods for cash. When you made a sale, the goods is going out. Real account says credit what goes out. So here goods is going out. You need to credit the sales. Then cash, it is an asset. It says debit what comes in. Here cash is coming in. So you need to debit the cash and credit the sales. Cash account data to sales account of rupees 3000. Cash account data on 4th, you made a sale, you receive cash. Cash account data of rupees 3000. Cash account data to sales account of rupees 3000. So I'll write as being goods sold for cash. Next, withdraw cash from office for personal use. As I told you in the earlier, if any goods or cash withdraw from the business for personal purpose, it is considered as drawings. It considered as drawings. Drawing is an expense it is. So you need to debit the expenses and losses and credit the income. Here it is, you need to debit the expense. And cash, withdraw the cash. Cash is asset. It says credit what goes out. Cash is going out. So you need to credit the cash. Drawings account data to cash account of rupees 1000. Drawing account data to cash account drawing account data to cash account of rupees 1000. We'll write narration as being cash withdraw from office for the personal use. Date on 5th Jan. We'll write date 5th Jan. Next, on 7th, paid advance income tax. Advance income tax is a personal expenses. So, this is paid from the business. So, it is considered as drawing. Drawing should be debit, and you are paying means cash is going out. Cash should be credit. Debit the expense, credit the what goes out. Here cash is going out. On 7th, you paid advance income tax of rupees 1500. Right? 7th. Drawings account debtor 1500 to cash account. $1,500 being advance income tax paid. Next, sold goods to Tukaram on account. That means on credit. On credit, you made a sale. Sales means goods is going out. Real account said credit what goes out. You need to credit the sales, and Tukaram is receiving. Tukaram, personal account says debit the receiver, credit the giver. You need to debit the Tukaram. Tukaram account debtor to sales account of rupees 3000. On 8th, Tukaram account debit to sales account. How much? Of rupees 3000. You'll write goods sold to Tukaram on credit. Next, paid carriage of goods sold to Tukaram on his account. That means any carriage paid for the goods, it considered as an expense for the goods only, the same goods. So you need to consider carriage as it's an expense for goods for the earlier sales transaction. So it is paid to on account of Tukaram. So you need to debit the Tukaram. He is receiving. So you need to debit the Tukaram, and you are paid the carriage means cash is going out. You need to credit the cash of rupees 100. On 9th, you paid a carriage on account to Tukaram. So Tukaram is receiving. Tukaram account debtor to you are paying cash. Cash is going out. So cash account of rupees 100. 14th, received from Kodandaram advance for goods rupees 3000. That means you are receiving some advance from the Kodandaram as an advance for the goods. So here cash is, you are received means you are receiving cash. Cash is coming in. So you need to debit the cash. What comes in? Cash is coming in. So debit the cash. Cash account debtor to Kodandaram is paying. Personal account say debit the receiver, credit the giver. Here Kodandaram is giving. So you need to credit the Kodandaram account, but you need to mention it is an advance of goods. So Kodandaram advance account. So you will write as cash account debtor to Kodandaram advance account, or Kodandaram advance for goods account. That is rupees 3000. On 14th, you will receive cash account debtor to Kodandaram advanced for goods account. How much? Of rupees 3,000. Of rupees 3,000. Next, on 19th, received from Kalyanaram 100 rupees note and give him a change for it. That means on 19th, you will receive 100 rupees note from Kalyanaram and you give a change for it. That means it is an exchange of, you will receive 100 rupees note and again you will give change for it. There is no necessity for recording in a book because you are receiving and immediately you gave the change for it. It will not affect your business. So you need not to write this transaction. If you want to write means, first you consider receive from Kalyanaram 100 rupees. That means when you receive from Kalyanaram, the entry will be, you are receiving is cash is coming in. Cash account debtor to Kalyanaram account. That is on 19th. Cash account debtor to Kalyanaram account, that is 100. You will receive 100 rupees from Kalyanaram. Again, you gave change for 100 rupees note. That means you are giving change to Kalyanaram. That means cash is going out from you. So, Kalyanaram is receiving Kalyanaram account debtor to cash is going out. So, you need to credit cash of rupees 100. So, if you want to write the transaction, it will be like this: cash account debtor to Kalyanaram account, again Kalyanaram account debtor to cash account. It will not affect your entry or your business transaction. It is not needed to write entry. Next, paid insurance premium. Insurance premium is an drawing. It is used for personal purpose. So, drawing should be expense. It should be debit. Drawing account debtor to cash account. You are paying means cash is going out. You need to credit what goes out. Drawings account debtor to cash account. On Jan 20th, rupees 200. 20th. Drawings account debtor to cash is going out to cash account of rupees 200. Of rupees 200. Acquired from Rajaram a motor car. First consider this. You are acquiring a motor car from Rajaram. That means you are receiving or you are purchasing motor car. That means the asset is coming in to your business. So, you should debit the asset what comes in. Next, when you made a purchase, in return you will pay cash or you may purchase on credit. But in this case, car in exchange for goods worth rupees 3,000, cash of rupees 2000 and check for rupees 5000. That means he purchased motor car and in return he gave goods worth rupees 3000 and cash of rupees 2000 and he gave a check of rupees 5000. So this is coming in for the business. Motor car is coming in for the business and goods, cash and check, this is going out from the business. So you need to debit the motor car and credit the goods, cash and check. Here goods is going out. If it is coming in means it is purchase. Here goods is going out, it is a form of sales. So it considered as sales. So debit the motor car and credit the sales cash as well as bank. On 21st you purchased motor car. This is coming in motor car account debtor. To in return you gave us goods, that means you sell your goods. It considered as sales account. Again you gave cash account. You gave a check, that is a bank account. The total motor car price is 10,000. Motor car price is 10,000. You gave a goods of rupees 3000, that means sales is 3000 and cash rupees 2000 and check of rupees 5000. So it is tallied. Next, for this you will write narration as being motor car acquired from Rajaram and in return you gave a goods, cash as well as check. You paid a cash, check as well as goods. Next, invested in National Savings Certificate. This is an investment. Invested in National Savings Certificate. So investment account debtor to cash account. When you invest, the cash is going out from the business. So investment account debtor to cash account. On 23rd, investment account debtor to cash account of rupees 1000. Being invested in National Saving Certificate. Next, 30th, sold goods to Sundaram for his domestic use. Here, you sold your goods to Sundaram for his personal purpose. But domestic use will not affect for your business. For your business, it considered only the sales. Whether he may use the goods for his personal purpose or some other purpose, it will not affect your business. But for your business, the sales is considered. So, sale means goods is going out. You need to credit the sales and the Sundaram is receiving the goods. Here they have not mentioned for cash or credit, but they have given the person name. So you considered it as credit sales. So he is receiving. You need to debit the receiver. Sundaram account debtor to sales account of rupees 1000. On 30th, Sundaram received. So he should be debited Sundaram account debtor to sales account of rupees 1000. You'll write narration as being goods sold to Sundaram on credit. The last one, sent money order to Shantaram and money order commission paid. This both transaction is made in the 31st. So, send money order to Shantaram means you are paying money to Shantaram. That means cash is going out. You need to credit the cash. Shantaram is receiving cash. So, you need to debit the receiver. In addition to this, money order commission is paid. You paid money order commission. So, commission paid is an expense. You should debit the expense. You should debit the expense. Send money order to Shantaram as well as money order commission paid. So, you need to debit the Shantaram account debtor, his receiver, and money order commission account debtor. It is an expense to cash account. Cash is going out of rupees 100 plus rupees 2. Total 102. On 31st, you send money order to Shantaram. Shantaram account debtor. You send money order of rupees 100 and you paid a money order commission. Money order commission account debtor. Money order commission account debtor of rupees 2 and to cash account. Cash is going out. Total you are paying 102. So you will write money order sent to Shantaram and money order commission paid. This is about your problem. This is the solution. Before starting the problem, you should write and starts with journal entries in the books of Venkataram. Journal entries in the books of Venkataram. And start doing the problems. This is today's session. In next session, we just move on to the next topic of your syllabus, that is ledger. After finishing the journal entry, you need to pass it to the ledger accounts. In the next session, we are going to learn what is ledger, how the journal entries should be posted in the ledger. All this will be known in the next session. Thank you.